they slid it down there quickly for you.
Yeah, they did. Let's do some introduction real quick, and then we're gonna walk through a trade just exited, and then show you what we're looking for yet in crude oil. As we're also going to talk about equities and stuff, which will be fun. Welcome to our live profiling Q&A session. We try to do these weekly. We didn't do one last week. I was spending some time with my family on the beach. That was great. And where is my, make sure I got the right tools here. But this is a start. We always want to be mindful of risk in markets. You know, if you've been around us for a while, this will sound like a broken record. If you've not, you'll hear us say this enough that it'll sound like it's a broken record. Really only two things that you can control in markets. That's it. There's only two things that you have any control over. And one of those things is risk. How much you're willing to risk when you put on a position or seek an opportunity. And then what's the price that you're looking to put that risk on. That's it. That's all you have. You have absolutely no control over anything else as far as the control of the market itself than those two things. I mean, there's other things that you control yourself, your rules, your approach, things like that. But those are two things you control. So we're always mindful of risk. We always start with that perspective. Also, if you're new to our community and some of these calls, note how we approach things. So we are behaviorists. And we always attribute to our buddy Tom and Corvia over at Blue Tree Strategies that fundamentalists interpret balance sheets, technicians interpret price, profiles interpret behavior. And really, when we look at the profiling of the tool, all that is it's helping us arrange price and volume to see how all market participants behave with respect to a concept of value. And we can see that through the profile graphics. A bit of welcome and introductions. So one, I'm Josh. I'm the founder of Trade with Profile. With me is JP, and we are working on building a community of traders who really are aiming towards trading consistency. So people ask, you know, like, what are you guys doing? What are you about? And really, we're a skill development firm that we've developed a process over time, something that we call the Profile Trading Development Pathway, which is really 16 ideas around how auctions operate that help you understand these three core ideas that we believe consistency exists at the nexus of. One, that there are 4 behaviors observable in every auction and how to observe them. That every auction has a beginning, a move, a rest, and then a test. That there are 4 questions to ask and answer before you put a trade on. You know, what is the opportunity? What am I willing to risk? What would tell me that I'm right? What would tell me that I'm wrong? And then 4 stages of auction competency and how to know which one you're in. Are you at a stage 1, which is an unconscious incompetence? You don't know what you don't know. Or are you at a stage 4 where you're at an unconscious competence, where you know things so well that you inhabit them and you operate instinctively? The idea is always to move towards stage 4 competency as we build in our development. We work with traders every day, week on and week out, by putting these principles into play in something we call a trade plan, which is just a way to take these principles, these vague concepts, and turn them into something actionable. We look for intraday swing opportunities in crude oil and NASDAQ futures as good products to be able to look at these concepts. But the thing we always say that the approach that we look at is product agnostic. So if you find that NASDAQ crude oil futures are not for you, everything that we do is transferable to equities, Forex, crypto, and other futures products as well. So with that, that's the quick, just kind of give you some background introduction about who we are and what we do, and we can jump over to our live discussion and Q&A today. Now, typically we try to have either a number of pre-submitted questions, or there's something happening in the market that we think is beneficial for developing traders to understand, that can help them just understand some of the common dynamics that are in play. And one of those that are in play is earnings season. So real quickly, I'm gonna jump out of this and jump over to this chart here. And I'm gonna walk you through what we're seeing here. This is a platform called IRT from a company called Linsoft. I do have to use external data to power this from DTN, and we're looking at 5 different products that are all related to index futures. So we have up on the left we have the S&P E-mini future. In the middle here we have the Dow, which is the YM. I don't know why it's YM. We have the Russell 2000. We have the VIX, which is a measurement of volatility. These are VIX futures. And then we have the NASDAQ 100 in the middle. These are combination, what we call a TPO or market profile, as well as a volume profile that's next to each of those profiles. And this is just kind of a quick high level grid that allows me to see how price is moving in all these products. Now, we have earnings. We're in the middle of earnings season. If you watch CNBC and Bloomberg and Cheddar and whatever you Yahoo Finance, however you're digesting, everybody's talking about earnings season and earnings reports. Last night we had Amazon report. We had Microsoft earlier. There are actually a shrinking number of companies that have a bigger and bigger impact on how these products move. Actually, just for an example, we've had some call a little bit of a pullback lower. The Dow has been weaker this week relative to the other indexes, and that's because the Dow is made up of 30 companies, one of those being Boeing, and there was new information around the Boeing 737 MAX that's created some concern, which has led to lower prices. So that whole index moves lower as a result of that. So these index prices are generated based on the composition of the companies that are in the indexes. So there's 500 companies in the ES, there's 30 companies in the Dow, there are 2,000 companies in the Russell, and there's 100 companies in the NASDAQ in terms of those indexes, right? So, and they have certain focus around that. You can have a significant company come out and move it. Now with the NASDAQ, for example, there are about 5 companies that represent about 50% of the weight of that index. And I could let you guess what those companies are from the tech side. But in case you can't guess, so Amazon, Microsoft, Apple, Google, and the last one actually often surprises people. Anybody know what the 5th one is? Or at least it was last time I checked. Netflix. Yeah. The only other one that can flip with is Gilead, GILD, from a market cap standpoint. But yeah, Netflix is the one. So with that being said, we're again in earnings season, and when earnings season happens, a dynamic that is in the market. Now we've said we're not fundamentalists when we look at the market. We're behaviorists. Well, there's a consistent behavior that occurs when you go into earnings season, and that's because every day you're getting new information over and over again. And one of the things that's changed in recent years is that these large companies that specifically move the NASDAQ, they don't report on the same day. We used to have like a Super Tuesday. You remember that, JP? Like we had like Super Tuesday where like all of them reported in one afternoon.
And it was nuts.
And it was nuts. And it also led to typically some significant follow through directionally in the subsequent day, depending on however we resolved at the end of the day. That doesn't happen so much. In fact, today, even though we've had earnings taking place, if I look at the ES, for example, which direction is the auction attempting to go? You could say it's sort of moving higher, but really we've been going nowhere. We've been going sideways for about 2 weeks. This is what we call a bracketed trade, where we get up here towards the highs of the bracket, and then we find sellers. We get down here towards the low of the bracket, and we find buyers, and we're just balancing. And part of that is the dimension of earnings season, because the auction will auction fairly predictably around price and value, except when you have new information coming into the market. And earnings is a form of new information that comes into a market. And when you have a new earnings release every day, there just isn't it's hard to find somebody who's willing to make a long-term directional bet because they know there's new information. And then, as as JP noted on our call with our community this morning, we have a number of events. You want to run through those, JP, for us next week on our calendar?
Yeah, it's crazy calendar next week. So we have started off. It's the last week of the month, which all kinds of crazy things can happen as far as markets are concerned and flows into and out of different funds. And then we also have FOMC, which is a rate decision here in the U.S. That'll happen. The meeting will start Tuesday and on Wednesday with the rate announcement, and then Uncle Jerome will go ahead and speak that afternoon. We have non-farm payroll, and then we have earnings with Google and Apple. And am I missing anybody for the big ones? So we have lots on tap next week.
We
so
have
it's going
lots
to
on
be
tap.
nutsy.
Yeah. So how do we trade that is essentially the question. Well, when that happens, when we're in an environment like that, simply we play the edges. Couple different ways that we play that. So one is to see a developed. You can see it actually even more pronounced here in the Nasdaq. And let me merge some of these profiles so that you can kind of see just how sideways we are here. Just gonna see how we're trading back and forth across the same prices. See how this thing isn't really getting any taller, it's just getting wider as we add to it.
And so with the auction, what we know is that moves come from the middle, which what you're seeing here is a big, large middle because we have consolidation, or what we call acceptance. So the question is, when will that do that? And how do I get on board that? Well, taking a position in the middle of this thing is what I would personally call the riskiest trade possible, because this thing could still rotate quite a few points like we've seen this morning. What's our range today so far? 79.30. So we're almost at 70 points this morning. And if you're trying to pick a direction and you're having swings of 100, 200 points, that's really difficult to trade that. You have to have a monster account to be able to do something like that, and I still wouldn't even recommend it. But so we know that there is a move happening, and most likely, as I talked to Josh this morning, we'll probably end up seeing that move in the European session, or maybe in the late Asian session or something like that. And it'll typically be, or after, of course, with earnings out, it could happen if we get a good Google or a good Apple. I'm expecting Apple to report good earnings next week, so that could be a gap situation. So a lot of times, if it breaks, then you just gotta let it break overnight, and then we can go ahead and set up a plan accordingly, which actually to me is a lot easier. Wouldn't you agree?
I would agree. I would agree. Yeah. So until that happens, and again, given that we have all of that stuff on the calendar, it's unlikely that we're going to get some significant moves outside of this until we get past some of those events. So that means that when we get up to prices where we are, we're looking really to play it back towards the middle. Now, it doesn't mean that we just, put a fade trade on. We want to find some type of behavioral trigger that could get us back, towards that middle. And so we'll look for some type of like strong selling order flow or some counter activity to push us back towards the middle. But then we can defend those edges as a way to go that way. If you're an option trader, I mean, this is a great market to put some type of strangle on. In anticipation, and would probably have it off before we got to FOM or non-farm payrolls or FOMC next week, because that could be a catalyst that really causes some movement. But right now, I mean, this is the edge play. So these are like the perfect prices to look for potential failure, typically on a longer time frame. So like even when it comes down to today, I'm just gonna jump over here to another chart and just kind of tell you what I'm looking for in the Nasdaq yet. So you can see every 30-minute we've had a higher high and a higher low. So if we could start trading below 84, either in this 30-minute period or in the next 30-minute period, if we can get below that, I could start leaning on that for rotations back towards some of these other, either the volume areas built today around 64, even potentially all the way back to 35 as an opportunity. Probably not below 28, just given how wide this first hour is relative to its average. I think we've done, where are we at here? Yeah, we've done 271 ticks. We averaged 203. So expecting a rotational day, but we need to see some sellers stepping in so far, and so far we haven't. All we've seen is buying, and until that changes, we'll wait. But this is the area where it's nice to look for some potential failure and rotation. We could actually trade all the way back up to this 8016 first, which is a prior auction reference before we see some failure. So that's kind of way to think about earnings. When you come into earnings, the auctions often go into kind of rotational stuff. You don't get good trending directional markets, so it's a good place to look to play the edges and just wait to see where that playground is defined, and then look for trigger behavior that can kick you back in, and look for those higher volume nodes as targets, as those are places to trade back towards. So here's that 7934 that's right back there in the middle. There's another node here at 66. That's why those would be targets for me if I see some failure yet today. Now, if we don't, and we just trend higher into the close, which we totally could, we always can, right? Again, it goes back to things we can control and things we can't control. We always could. Next week, those would be levels I'd be looking to defend to the buy side, as we could be potentially breaking out. Now, we did take one trade this morning in crude oil, and I want to talk through this trade. This was per our plan, and I'm gonna actually.
IBIs are breaking right now.
Yeah, they're.
And
This is the attempt to break out. We'll see if they can. All right, come on. There we go. And I don't really need that. Yeah, ES is up into that. So same thing in the ES. So our plan this morning, crude oil has been making a move. So similarly, eventually the auctions, when they are in a bounce like that, they will actually break out. So crude was in one of these for a while, several weeks, and then moved on a really big move here using inventory report from crude oil. That was the thing that caused the catalyst. And we're expecting higher prices in crude. However, for the auction to move higher, it's got to pull value with it, which we just define value as an accumulation of volume. That's what this is over here. This histogram shows me accumulation of volume. And overnight, we opened actually with a gap below yesterday's low. We knew that a significant level would be yesterday's point of control, the most traded price. And so what we're looking for is how would we behave around that price. In the first hour, we came up and tested that price and then found some sellers that stepped in. And so with that, we were looking for a push back through the open. And so that was a trade that we took. And I want to zoom in here and just kind of show you. We call this a pre-IB extension confirmation trade. How about that? So we rely heavily on the extension of the first hour to help give us some direction and what's yet possible in the day. So we had not yet extended that range. And the first thing that was interesting to me was here we had come up to that key level and backed off of it with some selling. These numbers show me a difference between buyers and sellers. So that was the first thing. Then I thought, well, if we get a lower low and follow through on these sellers, that's the entry. The initial stop is one tick above where these sellers started in. And then you can see that they consolidated, held, and then we just saw weaker buying and then stronger selling coming in here. And then a really big seller pushed us to our target, which was actually to take out the open and get these single prints. And we're now actually looking for, potential opportunity to go short again. But I'm looking for some more sellers to step in. I've seen a little bit of sellers stepping in, but not yet. And I would look for sellers unless we trade above, unless 5620 comes before we get more sellers that allow us to get back in this trade to the short side. So that's a IB extension without confirmation. So you're front running an expectation of IB extension, which some of you who've been on these calls, you'll know we talk about this a lot. If that's a new concept to you, the initial balance or the first hour of trade, what we mean by that is if you go back and look at about 5 years of data on a rolling basis, you'll find that 97% of the time we're going to extend that range, and 60 to 70% of the time we'll only extend it in one direction. And so once you've extended it in that direction, that gives you confidence that then the other side becomes an extreme. So that would make 5620 an extreme to lean against from a risk perspective to be short, at least for today. For the NASDAQ, since we've extended the IB high, that now makes it very unlikely that we would see below 79.28 today. Now we can trade back through a lot of this. We could definitely rotate, and still favoring rotations just given where we are overall. And we have a zone here of what we call single prints that could absolutely fill in. So we're looking, the auction to do kind of this number the rest of the day, unless we keep making a higher high and higher low on every 30 minutes, and that would be what we would call a trend day. And that could absolutely just drift higher the rest of the day, especially given the fact that we're on really low volume. So we got really low volume on our stats, and it's a Friday, and that can happen on Fridays. I would say
yes, it can.
It's more often that kind of stuff happens on Fridays. The Friday drift.
Yeah, Friday drift. There's, again, just party trading, guys, is just, and gals, is just, it's also knowing when not to trade.
Mm-hmm.
I can't express that enough, that when the times are ripe, you got to hit it. When the times are not ripe, you just got to sit on your hands. This is a wait game. This game is a waiting game, and psychologically, that's a really tough thing for people. Because they feel as if you're not making money, you're not doing your job and stuff like that. It goes against all of probably everything that we've ever learned growing up, and that's why trading is difficult. Trading is not difficult in the fact that, okay, you can throw money into an account, put a order entry up, and start clicking the button. That's not hard. It's pretty simple, actually. But what is hard is that, okay, first developing a plan, and then following that plan to the point where you have to be very patient and wait. Even the first 60 minutes of the trade day, which is an IB, is very difficult for people, because they're like, okay, well, the movement, golly, this gone 70 points. Yeah, it's gone 70 points. It stinks. Okay, I'll be the first to admit it. But where do you buy it at if it doesn't pull back? Do you just hop on, what we call hold your nose and hop on board? Right. I wouldn't suggest that.
No.
So patience is key, guys. And some days just it isn't there. I mean, when you look at this, the profile that's developing right now, you're like, wow, man, that thing's huge. But hold on one second. I'll be right back. Hold that thought.
Well, JP's going to be right back. So any other questions that you want to go after? I know a number of you wanted to look at the earnings stuff. I hope that's helpful. So it's a contextual way that we look at these index futures and products during earnings season, is that you can just, if you get a trade that's going for you, don't overstay its welcome, because the next day you can get another event that can change the perception of value and shift it. So the odds are not for continuation until we get past the season. And then when you start stacking that with FOMC and non-farm payrolls, it gets even more difficult. So it's definitely a place to look to play the edges. So we're here. Now we're just looking to see if we can get some trigger behavior in that direction. But any other questions, feel free to throw those in the chat, and or if there's specific products that you want to take a look at, we're happy to do that. And that'll be the balance of our time.
Tony says, what kind of auction behavior this morning do you observe in the ES? I think we've covered that. I mean, this is pretty much what they call an open drive, and was we're one time framing on a 30-minute basis, and so at this point there's really nothing to do. If you want to go in more details on that, Josh,
Yeah.
I mean, it's, again, low volume, we call it a drift, and this is really common, especially when we're in and around announcement time.
Yeah.
And I don't know how else to describe it, except you just got to be aware of it. And, like, for example, this thing's drifting higher. If you're trying to fade this thing right now, ouch.
Yeah.
So.
Yeah. Let's, in fact, here's a tool that we can look at that can kind of give you an idea of what you're up against here. So I'm just going to look here at a time-based chart, and let's size this to 50. And let's look at this on a 5-minute basis here. Okay, so see this slope right here. This is what we call delta bars, or cumulative deltas. It's a cumulative order flow for the auction. Notice at the open, we were pretty flat on the open, and all they've done in every 5-minute period, and this is looking at what's happened from an order flow standpoint for each 5-minute period, all they've done is add to the buy side. So, when that happens, it doesn't mean that we're gonna, we might pull back or see little dips lower, but those are not turns. This is the kind of stuff that is just gonna absolutely frustrate a bear all day long, because you're gonna think, oh, we've moved so far, so I must sell it. And the thing is until you see this overall cumulative delta change, you're gonna just step in this thing and just get squeezed all day long. So wait.
And there's more.
There's more. Yeah, just wait. Wait until you start seeing some. See, what I do in this type of environment, I'm at an area that I would like to see this thing, fail. And what I'll do is I'll just look. Well, one, I've got the decision level up here at 80.16. So I'm interested to see what happens at 80.16. Just like on the crude oil, does that invite sellers? That's kind of the first. It may or it may not. I'm expecting that it will at least pause the auction. And so if that happens, that's one check. The next would be, that could be a place, because historically sellers stepped in there. I'm expecting sellers to reemerge. If they reemerge, then potentially that could be what rotates us back into the profile and changes the delta. Until that happens, I wouldn't even think about going. And why not go long? Well, the question is, to what target? I already have a level here at 80.16. I'm almost there. So how much would I risk to get to 80.16? Not much. Not much. So there's far more opportunity if we could fail to the downside.
Yeah, and so we talked about this morning and on the channel and the community this morning. Listen, let me save you some money. I'm gonna try. What I want to always try to do is bring somebody some value. And so today I'm gonna save you guys a lot of heartache and a lot of money. All right. So this is an open question. So if you want to answer, that's fine. Is it easier to, is anybody a runner in here or anything? And I am a runner. If not, then this applies to driving a car or riding a bike or anything like that. Is it easier to run into the wind or have the wind at your back? Okay, that's a yes. Somebody answer that for me, because I don't know. Somebody answer that for me in here. I'm going to save you a little bit of money here. Oh, come on. Somebody's got to know this answer. Nobody?
I know the answer, but I'm not going to answer it.
Oh, you can use the same analogy for kicking it. Yeah, absolutely, Mark. Good. So yes, it's easier to run downwind. I actually ran last night, and I was on the outbound. It was super simple because I had the wind behind back. Turned around, I'm like, because we've had hard winds in the valley this week or last night, and it sucked. It was difficult, and I was struggling. I'm not lying. I was really struggling. So in trading, we have 4 questions in our community we always talk about. What's the auction trying to do, and the first, these are 2 questions of those 4. What's the auction trying to do, and how good is it doing it? Essentially what we're asking is there enough volume pushing that towards where we're trying to go, or where the auction is trying to auction to? And that's what we want to do. You want to be in the direction of where volume is going. because it's other time frame traders that are doing it. In other words, the institutions, the large guys and stuff like that. You know,
Whoa. Hang on a second. Crude just knocked through 5620.
yep.
Hang on a second, guys, real quick.
I had an order resting there, so I'm long. So
Boom. That's a big move.
yeah, that's a total reversal. They're going to kill them now. So
Yeah, they could run hard. So this is what we call neutral behavior, where you're extending both sides of the IB. This now changes the bias completely to the buy side. And so, if they can hold this 5613 area of volume, that could provide pullbacks to push towards 5680, actually. Wow.
mhm.
Big move.
Here they go. See if they can pump it.
Okay, back to you.
So hang on, let me get my stops taken care
of. Yeah, you got it covered.
Sorry, I didn't forgot I had a resting order up there for that breakout. So I told you if we went that direction, I was all over it. So okay, so volume, guys, is where's this thing going, and do we have the volume? And Josh just showed it to you with Delta. Delta is huge for us, because if go back to that last Delta chart, would you please?
Yeah. There you go.
All right. So you can see Delta's been building, okay? And do you want to fight that? Okay. Delta's strong to the upside. We have volume to the upside. So buyers are in control right now. So are you wanting to step in front of this and get short? I don't really think so. Okay. So what you have, your choices is like Josh said, hop on board. Okay. But based on where this is trying to go, which was 8016, as we identified this morning, we're almost there. So the risk reward is not there. There was no chance there. Okay. We needed a significant pullback. Matter of fact, if we went to and pulled back to that, pre-market bias that we were talking about in the 7973 area. Yeah. So if we pulled back into that, held that, then started to go up, that would have been a great opportunity right there. That would have been just a no-brainer trade. Okay.
Right.
But we didn't get that. We've been hugging the EMAs all the way up. The algorithms have been drifting us higher. So we just got to wait. We got to let it go. I know it's 70 points of range, and actually more than that now. What are we at?
Yeah, almost 80 points. Also, really easy way to get better trade location in the profile is that we just, wherever value is, we buy at or below value, and we sell at or above value. So value right now is 79.89. So I just as a rule, I will not buy above 79.89.
Yeah. And so, this is when we start looking to play the edges. Possibly we have to wait for the move to happen, and then we have to see if sellers can come in. We can see responsive sellers up around 16, and then maybe a cleanup trade later in the day. If not, then guess what? We move on and wait for another day. There'll be days where it's just amazing what how many trades you can get. Then there's days it's just like like today. So anyway, listen, guys, if you follow that alone, you'll save a lot of money.
Yeah.
Okay. Just because you won't be fighting that trend. Again, you could use every example. Surfing, do you want to surf into the wave, or do you want to ride the wave? Never seen anybody successfully surf into the wave. Okay, what is a cleanup trade? Okay, Melissa, that's a great trade question. So like today, we have a lot of movement on these with a lot of singles. Okay, we call them singles, and the profile is not what we call developed. It's sort of choppy. It's got a little bit of overlap and stuff like that. And so that means we've just had what we call an open drive. It just drives, pulls back a couple ticks and keeps going. Well, profiles just are not straight lines. Okay. I mean, it's a straight line if we have a monster event. But eventually they will come back and start to overlap and start to develop an area where it's being accepted. And you can see here where we are right now. I would be looking for it. If we get up to that especially if we get up to 8016, I will be looking for an opportunity to have a cleanup of that. And the cleanup just means we're just going to run back, clean some singles up probably, and then start to balance at the upper area of this this move here today. That's what I'm expecting to happen. Now, if we get a tweet out somewhere that we could take out the lows, pretty simple. I don't expect that today because there's nothing to tweet about. Yeah, the cleanup is just cleaning up singles and any really weird stuff on the profile.
Yep,
we actually
call it a yeah, that's definitely one clue. Change in delta, ending one time framing, you know, seeing some impulsive selling behavior that sticks. So like that's the first clue. I'll look and see, can I see some significant selling show up, and then can they hold for 5 minutes? Can we get another, you know, 5 minute low that could, you know, start going that. And I drew, here's yesterday. See, most profiles don't have these holes in them in the middle of the profile like we have today, where we have two zones like that. When we do, and they hold, like we had one a couple days ago. See, there were a couple zones here. Those become references that we typically clean up in subsequent auctions.
Yeah, so that's a great question. So right now it looks like the trade opportunity would be in my book. It's called a reversal trade and a cleanup. So, so we just got to be patient to wait for that. I'm still waiting. I won't look for that until we hit that 8016 though.
Hey, Stephen, your question on the RTH for crude. So crude is 9 a.m. Eastern to 2:30 a.m. Eastern, or 2:30 p.m. Eastern. As far as the hours that we track. Man, they migrated value.
All good questions. Yeah, all great questions. Very good. Anything else? Anybody else? Any other questions?
Yeah, those are good. We're good. Oh. Watch this be the day. I'm like, oh yeah, you know, I'm looking for the fade because we're in earnings season, so we're just gonna fade the edges and watch us trend into the close.
Oh, it could. Yeah, I mean, it doesn't happen often, but it very well could. I mean, that's probably the least amount. That's the least probable trade that there is out there. Is I mean, the open and go and just never stop. I call it. I mean, it's just ridiculous.
Yeah. Do we typically scale out of trades? Yes. Yeah, we do not. We're not leg in traders. We typically look to put on the full size and scale out as we head towards the target.
Mm-hmm.
All right, we may have some engulfing here on the NQ. They could close this 5 minute. That could be interesting. Can they do it? Yeah, they did. All right. Let's see. So this is the beginning of the type of behavior that I'd like to see. Is up here close to this 8016. I'm seeing some sellers stepping in. So now we'll kind of see if they can hold this area for a little bit, and then get, you know, some more sellers to step in. That could get us back inside of this opening hour range, and then start the rotations. Again, until that happens, this is just profit taking, is all this is. Just a pullback to the reload. Do we look at any pinning numbers for options on these Fridays? I don't. I know that there are people who do, but no, I don't.
It wouldn't be today. It would be only on options expiration is when that would happen, which is that was last week.
Right.
So yeah, no, I wouldn't do, and I don't even do that. That to me, that's the most risky trade I've ever seen out in the options world. I mean, we do expect it, but it's up to the market makers and the institutions where they want price. And good luck trying to figure that out. I mean, volume helps and open interest helps, but man, there's easier trades out there. So,
but it's a good question, and those are the types of questions. You know, if you've heard as you're developing your approach and playing the market, you know, there's so many, I'd call them trading myths or trading lore. You know, of here's things that I've heard are really effective, and you know, do you even use those? You know, so those are always like. I know, fundamentally the idea is that, yeah, if you were able to look at all of the strikes, if you came into OPEX, you could try to discern an expectation of where the auction might be pinned, but you would have had to have tracked historical option trades to know who was positioned where and where the open interest was to be able to predict that. And that's a lot of work. It's a lot of work.
It is. Here's another one. I'm going to give it to you. And this has changed drastically. If you hear anybody ever say this, be careful. Back in the old days, it did work because the range was not good. But they used to say on the ES, every 10 points on the ES, expect a pause or something like that. I mean, this morning we've ran 18 points straight up on the ES. Those are just, I mean, they used to work back in the day when we would only have 5-point, 6-point ranges in the morning, and they would extend it another 4 points, and then people would fade that 10 point. Man, you do that today, that's dangerous. So
Yeah, that's not
so lots of
wise.
myths. Nah, not wise at all. I expect another push up here.
Yeah.
See if we can take out these highs at 13, get to the 16, then I'll start looking. So.
Yep. Agreed.
May have any other questions? I mean, these are great questions, actually. So
good for them. Good for them trying to push these highs here.
Go for it.
Oh, that's a good question. So when this level holds, what's the definition of a level holding? So, like on my charts here, I have decision levels. They're areas that I look to make a decision. So let's start with expectation. So this 8016 is a prior level, prior point of control from the auction. So what I'm looking for is I'm actually looking for the auction to come up into this area and reject out of it, and that to hold it, or it pushes back through it and comes back through it. Either way, that would be them interacting with this level and pausing. Similarly to what happened in crude this morning, is that I had this level up here at 56.20. I was looking for them to push up into it, and they try to get past it and reject it out of it, and then we had the counter behavior come in. So that's what you're looking for. You're looking for the level to be interacted with, and you have an expectation of how it will behave once it gets there, and then you're looking to see if that behavior shows up. So, if I'm expecting it to pause up here, if we don't, then that's also telling you something about the auction in terms of who's in control, is that they don't care. So look, we're into that level. We're expecting them to pause here, or maybe even attempt above and push back through. But if they can't get back below this level, then you start looking at the next level.
The money, okay, here we are, 19. So, okay, so great. So another little, I would call it a nugget. It took me a long time to learn this, is that you're either going to want to be right or you're going to want to make money, and you can't be both.
That's
so yeah, and it's so stupid, but it's true. But it's when you try to be right, and as human beings, and again in the world that we typically live in, it's important for us to be right. We want to be experts, and we want to, whether you're in sales or technology or whatever you're in, right, you're the expert. You need to be right what you're doing. All right. In trading, it's not about being right, it's about making money. And that means you don't fall in love with positions. You don't try to fight, volume. You don't try to make things up and force your will onto the market. Okay. Because that's trying to be right. And when you're trying to be right, you're going to be wrong.
That's right.
So that's number one. And then the money's made by being, what's the guy's name? Hang on a second. I can't remember that book.
While you're thinking about that, Melissa, your question, does 16 have to be exact, or do you give it plus or minus? I mean, it's the number is exact because it is actually a specific price, but there's a zone. That's why I have kind of a zone around here that I'm looking for how it behaves in this zone, and I'll give it 2-3 points to either side of that.
Yeah, and I would never do a single number. I mean, that's an area. Every time we say a single number, it's just the area above and below it. They can poke it up through here, which they've done, and it looks like they're going to keep running it here. So these guys are very much in charge. Matter of fact, all-time highs on the ESs.
Not
Did we
far
just
away.
hit them?
No, huh? Not yet.
What
We
what are
got
they?
a little bit.
28?
Yeah, we got a while.
A while.
Yeah.
So okay, so the other thing, okay, to 29.50. So the other thing is the money's made by waiting. And I think it was Livermore who said that, but it really is true. You sitting on your hands is how you make all your money. And I know that's like, wow, what are you talking about, you nut job, right? No, it really is. Because let's say you were trying to make money on the way up here by fading this thing, you're getting killed. But then it's the stairs up and the elevator down. But if we get a reversal here coming up here and we get a cleanup, then we can probably clean up a lot. The more we go up, the more we're going to get to clean up. So then the patience pays off for us. And so when you're trading, if it's not clear, if it's not crystal clear to you and it's in your trade plan, then it's time to get on those hands and sit. And a lot of times we suggest putting Josh and I will put in alerts and then walk away, because it doesn't. It doesn't tempt you, because the market is a finicky. She. The market is very finicky, and she can seduce you in quickly.
That's right.
And so you got to be very careful. You got to be stronger than that. And the one way to be strong is just to leave your office, leave your screens. You're not going to miss anything. And I'll leave you with one last nugget. I mean, and these are really good because these are things that I had to learn. This is not just because oh my gosh, I'm trying to give you guys all this great information. This is stuff I learned. Okay. This is the best one. You miss a trade, you will miss a trade. I promise you, right? There will be thousands and thousands and thousands of more trades out there. And most of them will be better than the one you just missed.
Yep.
So when you get that into your brain and you say, okay, I just missed a trade, no big deal. There's going to be thousands of them. I mean, think about that for a minute. There are going to be thousands of trades. This market opens every day except the holiday, and it's still open, but you shouldn't be trading. But it opens every day other than the weekend. And I mean, it's going to continue to do because it's the backbone of the economic world, right? Yeah. We have to have open trade. So that's what's the beauty part of it. But at the same time, you don't need every trade.
Yeah.
And if you miss one, it sucks sometimes because it could have been the what I call the bag of money in the corner. But you know what? There's going to be thousands of more of those. So just, all right, shake it off, wait for the next one, go do something different and come back when it's time. So
that's right. Yep.
That's all I got. That's all I know.
That's good. Well, alerts are going to be the name of the game today.
Yeah, for sure.
For me right now, unless we can get back below 8,002, we're not holding it at 8,016. So this is trend day. It's a trend. We say this is a trend day until it isn't. Yes. And the program's just are running it. So I'm probably done for the weekend, actually.
Yeah, my plan says at 9:00 a.m. Pacific Standard Time I am done, and right now I'm looking pretty much done unless we get a quick reversal here. We got a couple more minutes, and then I'm going to jump. Do we have any last-minute questions here before we head into the weekend?
Yep. Yeah. Thanks for the participation, everyone. Appreciate it.
Yeah, absolutely.
Hope it's been helpful.
Hopefully, we'll be able to give you something that you can take back and apply, and you can always check us out as well. No more questions, guys? Going once, going 3 times, going 5 times?
Sold.
That's it, I guess.
Right.
We must have done a good job, or we're terrible.
That's right. We got them all. That's all right. Thanks everybody. Have a great weekend.
Yeah.
We will be back next week with another Q&A, and which you'll get a notification of that, and we'll look for the recording sometime either later today or early tomorrow. We'll send that out, and it's there for your review. And let us know how we can help you in your development journey. So if you're still not at that a level of consistency yet. You know, schedule a call. Let's try to figure some stuff out. Get you on that path. Have a fantastic weekend. We'll talk to you later. Peace.
Yep. Take care.